Preparing for a banking interview at Riyad Bank Interview. You've reached Candy Mentor, and this video is for you. We'll walk through 15 key questions you're likely to face. For each question, you'll see a sample answer followed by the key points to cover. Subscribe, like, and share, and drop a topic request in the comments. Question 1. Why do you want to work for Riyad Bank? Riyad Bank stands out to me because it combines a strong Saudi franchise with clear growth exposure to Vision 2030, digital banking, corporate lending, and SME finance. I would connect my answer to the role: strong customer orientation, disciplined risk thinking, and comfort with financial analysis. I would also mention that I want to build a long-term banking career in an institution that serves individuals, businesses, and major national projects. While answering, focus on Riyad Bank's Saudi market position, Vision 2030 exposure, digital transformation, customer franchise, and why your skills fit the specific role, rather than giving generic admiration. Question 2. Tell me about yourself and why your background fits this banking role. My answer would be structured around 3 things: education, relevant experience, and fit for Riyad Bank. I would highlight any finance, accounting, customer service, credit, or analysis exposure, then show how those skills translate into the role. For example, I might say I enjoy working with numbers and clients, I understand banking requires trust and accuracy, and I am motivated by contributing to Saudi Arabia's growing financial sector. Make sure to cover your background in a structured story: education, relevant experience, banking skills, customer or analytical strengths, and a clear reason you are interested in Riyad Bank. Question 3. How would you assess whether a corporate client should receive a loan? When assessing a corporate loan, I start with repayment capacity, not collateral. I review the business model, industry position, historical financials, cash flow stability, leverage, and debt service coverage. Then I assess management quality, banking conduct, existing facilities, and purpose of borrowing. Collateral matters, but it is a secondary source of repayment. A strong recommendation should explain risks clearly, propose covenants, and align facility structure with the client's operating cycle. In your answer, talk about repayment capacity, cash flows, leverage, collateral, industry risk, management quality, account conduct, covenants, and matching the facility structure to the client's business cycle. Question 4. Walk me through the 3 financial statements and how they connect in credit analysis. The income statement shows profitability, the balance sheet shows financial position, and the cash flow statement shows actual cash movement. In banking interviews, I would not describe them separately only, I would connect them. Revenue growth may look positive, but if receivables rise faster, cash flow weakens. Higher debt increases liabilities and interest expense. For credit analysis, cash flow is often the key, because loans are repaid with cash, not accounting profit. Be sure to mention the income statement, balance sheet, cash flow statement, working capital movements, debt impact, profitability versus cash generation, and why bankers focus heavily on repayment cash flows. Question 5. What is International Financial Reporting Standards 9, and why is it important for a bank like Riyad Bank? International Financial Reporting Standards 9 uses an expected credit loss model, so banks recognize credit deterioration before an actual default occurs. Stage 1 covers performing assets with 12-month expected loss. Stage 2 captures significant increase in credit risk with lifetime expected loss. And Stage 3 is credit impaired. For Riyad Bank, this affects provisions, profitability, and capital planning. I would link the concept to prudent lending, portfolio monitoring, and early action on stressed accounts. While answering, focus on expected credit losses, Stage 1, Stage 2, Stage 3 classification, provisioning impact, profitability, capital planning, and the importance of early credit risk monitoring. Question 6. What is the difference between Islamic banking and conventional banking? Islamic banking is based on Sharia principles, so returns must be linked to underlying assets, trade, lease, or partnership structures, rather than interest on money alone. Conventional lending charges interest on principal, while Islamic products may use murabaha, ijara, or musharaka. In an interview, I would avoid saying Islamic banking is simply interest renamed. The real point is risk sharing, asset backing, transparency, and compliance with Sharia governance. Make sure to cover Sharia compliance, prohibition of interest, asset-backed structures, risk sharing, common products like murabaha and ijara, and why Islamic banking is not just conventional lending renamed. Question 7. How would you handle AML and KYC responsibilities in a banking role? AML and KYC protect the bank from being used for money laundering, terrorism financing, fraud, or sanctions breaches. Practically, I would verify customer identity, understand source of funds, screen against watch lists, monitor transactions, and escalate suspicious activity. In Saudi banking, regulatory discipline is critical because trust is the core product. I would never ignore red flags to meet sales targets. Compliance and growth must work together. In your answer, talk about customer identification, source of funds, sanctions screening, transaction monitoring, suspicious activity escalation, documentation quality, and balancing commercial targets with strict regulatory compliance. Question 8. What is CASA, and why does it matter to a bank's profitability? CASA means current account and savings account balances, which are generally lower-cost funding sources for a bank. A strong CASA base improves net interest margin because the bank funds loans more cheaply. For Riyad Bank, growing salary accounts, digital engagement, and transaction banking can strengthen CASA. I would also mention stability. Low-cost deposits are valuable only if they remain sticky, diversified, and supported by good customer relationships. Be sure to mention current and savings accounts, low-cost funding, net interest margin, deposit stickiness, customer relationships, digital engagement, salary accounts, and why deposit quality matters. Question 9. Tell me how you would handle an angry customer at a branch or contact center. If a customer is upset, I would first listen without interrupting and confirm the issue in clear words. Then I would check facts, explain what can and cannot be done, and give a realistic timeline. In banking, empathy alone is not enough. Accuracy and confidentiality matter. If the issue involves fees, delays, or account access, I would document the case and follow escalation procedures until closure. While answering, focus on active listening, empathy, fact-checking, confidentiality, clear communication, realistic timelines, escalation procedures, documentation, and closing the issue rather than merely calming the customer. Question 10. How would you cross-sell Riyad Bank products without being too aggressive? Ethical cross-selling starts with understanding the customer, not pushing a product. I would ask about goals, cash flow, risk tolerance, and current needs. Then recommend only suitable solutions, such as a savings product, card, financing facility, or insurance-linked service where appropriate. For Riyad Bank, strong sales performance should build long-term trust. Mis-selling may create short-term revenue, but it damages reputation, compliance standing, and customer lifetime value. Make sure to cover needs-based selling, suitability, customer goals, risk tolerance, ethical conduct, long-term trust, avoiding mis-selling, and linking products to real client value. Question 11. How do rising or falling interest rates affect a commercial bank? Rate movements affect both sides of a bank's balance sheet. If benchmark rates rise, loan yields may increase, but deposit costs can also rise as customers demand better returns. The net impact depends on repricing gaps, asset liability duration, fixed versus floating facilities, and deposit stickiness. I would explain that Treasury and ALM teams manage this through limits, hedging, liquidity planning, and pricing discipline across the portfolio. In your answer, talk about loan yields, deposit costs, net interest margin, repricing gaps, asset liability management, fixed versus floating rates, liquidity planning, and Treasury risk controls. Question 12. What early warning signs would you monitor in a weakening borrower? Early warning signs usually appear before default. I would watch for delayed payments, frequent overdrafts, declining account turnover, rising leverage, shrinking margins, unpaid suppliers, management changes, and weak financial reporting. If I spotted these, I would not panic, but I would intensify monitoring, request updated financials, reassess cash flows, and consider restructuring, additional collateral, or exposure reduction. The objective is loss prevention, not reaction after damage is done. Be sure to mention payment delays, overdraft behavior, falling account turnover, margin pressure, leverage increases, supplier issues, management changes, poor reporting, and proactive monitoring before default occurs. Question 13. Why is digital banking important for Riyad Bank's growth strategy? Digital banking matters because customers expect speed, convenience, and secure access across mobile and online channels. For Riyad Bank, digital adoption can reduce branch pressure, improve data insights, and support scalable growth. But digital banking must balance usability with cybersecurity, fraud controls, and customer education. In an interview, I would connect technology to service quality, operational efficiency, and risk management rather than treating it as only an app feature. While answering, focus on customer convenience, mobile adoption, operational efficiency, reduced branch load, data analytics, cybersecurity, fraud controls, customer education, and scalable service delivery. Question 14. What is capital adequacy, and why do regulators care about it? Capital adequacy measures whether a bank has enough capital to absorb losses while continuing to operate. Under Basel-style regulation, banks compare regulatory capital with risk-weighted assets, so riskier loans require more capital. For Riyad Bank, strong capital supports lending growth, depositor confidence, and regulatory compliance. I would keep the answer practical. Capital is the shock absorber that protects the banking system during stress and market volatility. Make sure to cover regulatory capital, risk-weighted assets, Basel principles, loss absorption, depositor confidence, lending capacity, stress resilience, and why stronger capital supports banking system stability. Question 15. Describe a time you worked under pressure while maintaining accuracy. In a banking role, accuracy and speed often compete, so I would manage pressure through prioritization and controls. I would identify urgent regulatory, customer, or deadline-driven tasks, then use checklists, reconciliations, and maker-checker review where needed. If a mistake risk appeared, I would communicate early rather than hide it. Banks rely on trust, so reliable execution is as important as technical knowledge in every finance function. In your answer, talk about prioritization, deadline management, control checks, communication, escalation, attention to detail, accountability, and why accuracy is critical in banking operations or finance roles.